in listen-only mode.
Yeah, hello friends, and thank you for joining this webinar. Myself, Ayush Tilisra, Product Manager for Equity at HDFC Securities. So friends, in today's webinar, we will discuss on a very interesting topic. That is how one can leverage the market cycle for their advantages. As we all know that stock market cycle is a wide term referring to trends or patterns that basically emerge during different market or business environment. And during a cycle, some of the securities or asset class outperform others because their business models are aligned with conditions for growth. And today, to help us to understand this cycle in a detailed way, we have Mr. Jiten Parmar and Mr. Niteen Dharmawat with us in today's webinar, who has a deep understanding of the strategy and comes with a combined experience of almost 40 plus years, that is more than 4 decades in this industry. And they have launched a very exciting portfolio. I can say that they have launched a portfolio called as in cyclical bets, where they identify stocks which are a part of uptrending market cycles and the business cycles. So before I hand over the session to them, would like to add a brief description about them. So friends, Mr. Jiten and Mr. Nitin are the co-founder of Aurum Capital. Coming to Mr. Niteen Parmar background, he's an entrepreneur and a passionate long-term equity investor where he has been investing into the market since 1993. He's very well known in the Indian equity market and is considered as one of the foremost value and cyclical investors in the Indian market, and you can regularly see him being featured on a premium business cycles like CNBC, ET Now, Swadesh, and so on. So coming to Nitin's background, he comes with an superior experience of working with leading companies like Crisil and L&T and so on. He also started his equity market journey 20 years ago as a hobby. His focus, I can say that, is long-term value investing ideas with sound fundamental companies. He's a seasoned professional with areas of expertise spanning across research, corporate sales, marketing, and key account management. So without taking any more time, I would like to invite Mr. Jiten and Mr. Nitin over the call. Okay, so who can help us understanding how market cycles can be leveraged for their benefits. So welcome Jiten bhai and Nitin bhai.
Good
Thank you,
evening,
Ayush.
everyone. Thanks, Ayush.
Sorry to interrupt the team due to some technical issue. Mr. Nitin webcam is not working, so he is there on the call, but only his audio will be available. So we are really sorry for the technical issue. So over to you.
Hey, thank you, Ayush. I hope I am audible, and thank you, everyone. Good evening, and very sorry that there is some technical issue because of which I am not able to put on my camera. But anyways, I'm always there with the audio, and Jiten is also there with us, both in audio and video.
So, Ayush, we can start with, what our experience has been over the years. I've completed about 30 years in equity investing last year. First 10 years, I was investing in US markets. And since then, I've been investing in the Indian markets for the last 20 years. Basically, what we have observed over a period and basically gained experience and built a framework is how to, how to do value investing. And within that, how to leverage, market cycles and business cycles across different sectors. I mean, we have a natural tendency to learn about new sectors, new companies. So we have a lot of sectors under our coverage, and we follow their cycles quite closely. So the cycles typically, I mean, there are 3 types of cycles, which is business cycle, market cycle, and the economic cycle. I mean, it's pertinent to focus on primarily the market cycles and business cycles for the companies and sectors. That's why, we have come out with a product which basically is fruit of our experience and long journey in this particular style of investing. and we try to basically put all our experience and learnings gained over the years into this product. Within value investing and in the ambit of cyclical investing, what we try to do in this particular small case, which is the cyclical bet small case, is we try to basically play out turnaround cycles. We like to get into cycles where the turnaround is imminent, or or has just started. And then what we have observed over the past cycles and in our experience is that if one is able to invest at good valuations and patiently wait for the cycle to play out, one can make superior returns. Apart from that, I mean, we have a very detailed process oriented approach to selecting the stocks in the list of stocks which are there in the small case. Primarily, we look at subjective and basically scuttlebutt research also, and I mean, we look at balance sheets very closely. Corporate governance is something which we don't compromise on, and above all, valuations should be in favor. The risk reward should be in favor of the investor is what we try to achieve. And till date, I mean, this product has been there for more than 2 years on small case, and we have done fairly well in this 2-year period. And we will continue to do the same things, play cycles. Contrary to popular belief, I mean, we still call ourselves long-term investors. Our churn ratio is not very high, but we just wait for the cycles to patiently play out and try to maximize returns for our industry. Niteen, you want to add something?
Yeah, absolutely. And is there an echo at my end?
No, I think it's clear. Yeah.
No, it's clear.
Okay. Because I could hear some echo. Okay, so as Jiten, highlighted, our focus has always been, long-term investing in all the stocks that we are, recommending, researching, and we generally focus or look at stocks from couple of perspective. One is we do a lot of contra investing, so we go against the tide. If something is discarded, avoided by the market, overlooked, then the valuations become very attractive over there. So definitely it becomes a case for us to look and invest in those companies. So that's one area. The second part is whenever we are buying those stocks, we are buying it with a perspective of 3 to 5 years. So in interim, we can have some corrections because we may not know if the cycle is going to turn around over there immediately or it's going to take time. However, our endeavor is always to shorten that period, and we do a lot of data crunching with keeping that in mind. And this data could include a lot of market-based information also about this sector, about the companies, the products that they are selling, their customers information, their customers information, their suppliers information. So a lot of those things is scuttlebutt that we carry out before deciding whether we would like to invest in these sectors or not.
And to add, I mean, we always have a exit strategy in place even before we recommend something. Obviously, we let the thing play out, but we always have parameters of exit in our mind even before we initiate the call. And of course, we keep on adjusting and tweaking as we go along, because sometimes companies do much better than what you had thought, or sometimes companies do not perform as you had thought. So you have to keep on tweaking these. But the idea is to basically, ride the cycle. And of course, when we exit, we always think that we will leave something on the table for the next set of investors. But the exits could be for two reasons. One, we think that it is at far more valuation than what it deserves, and it could also be that there could be another opportunity where the risk reward is in favor. And the third thing is we will exit if we believe we have gone wrong. Occasionally we do go wrong, and we are happy to admit that yes, this is not playing out as we had envisaged, and we will exit also. So occasionally, yes, with one or two of the stocks, something like this can happen, and that is what happens in investing. We try to have far more winners than losers, and till now we've been able to do it, and we hope to continue doing this.
So, Jiten,
Yes, I.
yeah. So, Jiten, can you, is it possible? Can you just share the success story for one of the stock that you were holding in the portfolio that has been rebalanced and the profit is been booked, and the rationale, the logic? What was the logic that was being used before picking up that stock? What was the logic behind that?
So, we can give example of one of the stocks which we have in our list, which we initiated at around, I think, 525 levels or something. See, the valuations were favor. This was from the capital goods sector. Valuations were very much in favor, and we could envisage a turnaround in the cycle. And this stock is currently at 2700, and we still are holding the stock. So it's already a 5+ bagger, and we are still holding the stock. So that is what we try to do, basically. So when we initiated, we obviously didn't think that it will do so well in just 2 years. But obviously, a lot of times, tailwinds come for the sector. Sometimes what you estimated, the demand is higher than what you estimated. So that those things happen. Now the key is to understand every quarter. Basically attend the phone calls, ask questions to the management, and keep on recalibrating and see that your investment thesis is intact, and whether there is still some way to go. So that is one example which I can give from our list of stocks. Apart from that, we have had some stocks where things will play out, and we have exited also. So, but the idea is to have lesser and lesser losers, and the losers should be small, and the winner should be big. That's what we try to do.
Okay. And what is the CAGR that this portfolio had generated?
I think this is done. Niteen, can you just check up, because I've not checked what is the latest one, but just give me a second. So CAGR is 41.34% of today.
Okay. Okay, because if I'm not wrong, correct me if I'm wrong. In the last 1 year, there's not a very deep movement in the Nifty on that. Nifty एक साल पहले और अभी में almost at the same level ही है, and getting a CAGR of 41% in during that time is a big thing that I believe.
Yeah. So yes, I mean the comparable benchmark for us on small case is equity small cap, and that is down exactly for last 1 year. If you look at the 1 year performance, it is down around 11.5%, and we are up a little more than 16% in the last 1 year.
Okay, compared to the benchmark.
Yes.
Okay, That's a very huge difference. I can say that.
So we all know that last 1 year has been very difficult, period, and all the indices, even if you look at small BSE small cap, Nifty, have gone
Okay.
nowhere or are down. And yes, we have still been able to generate a decent return. Again, see, performance is something which obviously uh, will be different for different people based on their time when they enter and all that. And this is something which obviously we will not guarantee. And this is something which is calculated by small cases.
Hmm. No, agreed. Jima, would like to add anything over here?
Yeah, so as you know, we are talking about the performance. Just one thing that we should understand that we should not extrapolate the numbers, and I'd like to warn about that. If we are looking at some numbers over there and extrapolating that number that this will be achieved over a period of time, it would not be right because there can be different things, there can be different risks coming in. Extrapolation of the numbers is not the right thing to do. We should always keep in mind the risk associated with equity investment. One. Second is we might have been performing because some of the stocks have performed really well for us. Some of the sectors that we have chosen work well for us, which may or may not be the case in future. So risks should always be kept in mind, and I always stress on that. I know that people from the marketing may not like it, but as a investor, I'd like to place the caution first in equity market before we take the step of investing into the market.
Yeah, absolutely. I mean, so it's been little more than 2 years, and this 41% CAGR is definitely very difficult to replicate. Let's be very honest about it, because in the first year we've had exceptional returns. I mean, the market did well, and uh, uh, we also obviously did far better than the market, but still, that first year was very good for equity. So. We have to take everything with a pinch of salt and moderate our return expectations, because in the long term you can't make these kind of returns in equity. I think not even 1 or 2% people can make these kind of returns in the long term, to be honest. So yes, it is very important to exercise caution and have reasonable return expectations.
Agreed. Totally, completely agreed.
So
So what we'll do
the
that
thing which let me so the thing which is in our hand, okay, we will continue to do that. Basically, select good companies in the list, companies with good corporate governance, companies where risk reward is in favor, and being in the right sectors, avoiding the sectors which uh, uh, is also very important thing. For example, in our list there is no IT services stock, for example, since I think
okay.
last up to 2 years. So we've kind of sort of avoided. So it is people forget that uh, equal focus should also be put on what not to buy, as much as you put on what to buy. What to avoid is also a very important thing, and especially if you are playing market cycles and business cycles, it becomes very important, because there is a timing element to this kind of investing, and so that's what we try to focus on. We will continue to focus on the things which we have been doing, and we will leave the rest and the returns to the market. That's all we can say.
Okay. So now,
Perfect. So that's a very important point that Jiten has highlighted. So not only that, actually, if you look at it, we started services sometime in 2018. The first product that we had was focusing value investing research service. That time, again, financials, NBFCs, banking sector was performing, extremely well in the market they were giving extremely good returns. This were sort of very hot sectors that time, and we completely avoided during that period. We had been questioned about that. We couldn't, and we had to resist because we knew that these are hot sector. They should not be chased. The valuations are not justified, and we would like to keep away from them. So 6 or 8 months was a period which was very difficult from that perspective. But when the tide turned, it turned for good, and then sometime in 2022, we went ahead and invested in banking and financial services. So we have invested in those sectors, in those companies. We believe that the valuations were justified. We have stocks in cyclical bets also from NBFC sector. There are multiple companies we looked at it, including private banks or public sector banks. Again, valuations is critical for us. So we avoided something, but we went ahead and included. So there is no such sector as which we don't like. We will like if it is offering value, if it is justified, and it has a potential to give us reasonable returns over a period of 3 to 5 years. Without taking undue risk. So that's our investment philosophy behind all our products.
Okay.
And to add, I mean, if you see, financial sector has a very high weightage in the indices. I think in Nifty it is more than 35%. So to be zero, have zero stocks under coverage, and that too for I think at least a 2-year period wasn't easy. I mean, there would always be questions that you don't have any financials and so on. But we kind of waited for a few things to play out for us to warrant a look. Typically, if I can give an example of this thing is financials is that we were waiting for the NPS cycle to turn, and we also wanted to see credit offtake start happening and increasing. So these two things is what we were tracking very closely, and when we saw that yes, these two criteria are checklisted, we went ahead and recommended quite a number of stocks across our strategies. So that's what we try to do with all sectors. For example, capital goods, where we had highest number of stocks, we initiated in 2021 in our strategies. This strategy started in 2022, and we immediately went into capital goods because that's where the turnaround in the cycle started. So we will always, kind of be away from some sectors completely, and then when we feel that the time is right, we will immediately ramp up. And as I mentioned, some of these investments are they are right from the start of the product, or some of them we are holding for 3 years and so on. We try to maximize the returns from each stock which we can get.
Okay. So now what we'll do that we'll go to this screen and understand that how one can take an advantage of that, how one can invest in the cyclical bets portfolio. So friends, at HDFC Securities, this Aurum Capital Cyclical Bets portfolio has been offered through basket investing platform. So what you need to do that, one need to visit our website hdfcsec.com, and over here they can see the option as a basket investing. They need to click over here. Then under basket investing, there is the option as a managers. So you need to click on the managers section, and the moment you are over there, you can see the Aurum Capital listed on the top. If you go to the Aurum Capital, you need to, the moment you click on that, you can see a background about what Aurum Capital is. Okay, a brief description about Mr. Jiten Parmar and Niteen Dharmawat, a brief description about that. And if you scroll down, you can see the basket that has been offered from there, and this basket has been completely managed by Aurum Capital, where the name stands as Cyclical Bet Small Case. So the one needs to click on that, and the moment you click on it, you can see a brief description about that, a one-liner, what exactly this small case is, and about the small case, why one should go for investment into the same, the methodology being mentioned over here, the fact sheet being mentioned over here, You can download that, a brief description about the same, and you can see the amount that has been suggested also. This is a recommendation, but it completely depends upon you. Okay, it's a purely investor decision and discretion what they need to go for that. But if possible, go for investment for 5 lakhs, but it's completely up to the investor on it. And if you see the CAGR, the main thing what Mr. Jiten and Niteen had covered on the same. Okay, the CAGR for that, the last 2-year CAGR for the basket is 41.34%. So getting a CAGR of 41.34% into the current market scenario seems to be difficult, because ये वाला return current market scenario में delivered करना थोड़ा difficult है. And the performance for that. So this basket benchmark is equity small cap. The yellow line जो आप यहाँ पे देख रहे हो, this is the performance of the small cap. Okay, since 22nd of March 2021, when the portfolio was been introduced on the small case platform, you can see the performance for that, how the basket have performed compared to the benchmark on that. A performance has been mentioned over here, and what if your investment would have been 100 rupees, what would have been the current value for that. So for 100 rupees, as per the current scenario, if one would have invested into cyclical but small case, it would have been 202.85 paise compared to the benchmark of 114.45 paise on that. And if you see the comparison with the top 50 stocks, okay, Nifty's top 50 stocks, so over here the return is only 19.84% compared to a return of 102.85 on that. So you can check 2 years, 1 years, and even the SIP return for the same. So the entire detail can be checked over here. And currently you can see the option as in subscribe now. So as it's in subscription based module, okay, it's in premium basket. So as we all know that premium thing comes with a slightly fee on that, because it's been managed by an exclusive and a highly oriented research managers like Mr. Niteen and Jiten on that part. So this, you need to subscribe the same before going and invest into that. So one need to click on subscribe now. The moment you click on subscribe now, okay, you need to enter your email ID, then need to click on continue and select the plan for that. You either want to go for 6-month plan or the 12 months plan. As the 12-month plan has been tagged as a best value, so I will show you why it has been considered as a best value. So currently Aurum Capital is running with an offer on that. If one opts for a 12 months plan, okay, that is for 20,000 including GST, and the moment you go on apply offer, you can see that they are running with an offer where they are giving 5,000 rupees discount on that. So by clicking on that, you can see that the fee is being changed to 14,999. So it's an exclusive offer which they have launched, and it can be closed soon on that. So don't wait for that, just go for an investment as soon as possible. Then you need to click on continue. Your billing details needs to be added over there, and there's a bank mandate which you need to set for getting the fee being debited at the time of renewal. So over here जब आप बैंक मैंडेट सेट कर रहे हो, it's not necessary कि जो आपका बैंक अकाउंट HDFC सिक्योरिटीज के साथ लिंक है वो बैंक अकाउंट से ही आप मैंडेट सेट कर सकते हो. At the time of setting up a mandate, you can link any of your bank account भी over there. आप कौन से भी non HDFC सिक्योरिटीज लिंक बैंक अकाउंट भी वहाँ पे सेट कर सकते हो फॉर मैंडेट. आपका फी जो है वो रिस्पेक्टिव बैंक अकाउंट से डेबिट होगा, but your investment amount जो आप इन्वेस्टमेंट करोगे, that investment amount will be debited from the bank account that has been linked with HDFC securities account. So once you set up the mandate and everything, you will be again redirected to this page where this subscribe now option will change to invest now, and the stocks in the portfolio will be unlocked and you can see the stocks for the same. So currently the minimum investment amount for the basket is 54,881, but it's suitable that one should go for an investment of at least 5 lakhs on the same. So it's a just suitable amount. The further depends upon the investor how much amount he want to go for that. But जो weight setup किए हुए हैं on the basis of stock, the minimum investment amount for the basket comes at 54,881, and this basket has been rebalanced on monthly basis. On a monthly basis, the Aurum Capital research team, they evaluate the entire basket. Wherever they feel that कुछ stocks में changes करने हैं depending upon the theme that has been derived for the basket, they feel that if from A, B, C, D, E needs to be exited, F needs to be added, A में weight increase करना चाहिए, किस में decrease करना चाहिए. So accordingly, the entire detail has been prepared and it's been pushed accordingly. So the investor gets an intimation for the same, and he need to click and approve the same. Then only the rebalance will happen. It's not an auto rebalance. He need to click and approve the same. And in case if we miss the communication also, so what he can do that he can go to the notification icon. Okay, over here he can see that pending rebalance, your one small case is yet to be updated. So the person needs to click on that, and then accordingly he can get the basket bin rebalance. So this is how the entire subscription and the investment journey will work through HDFC Securities platform. So before we start the Q&A session, Mr. Jiten and Niteen, would you like to add anything, or else we can move on to the Q&A where participation can type questions on the chat box section and we can take it ahead accordingly.
Yeah,
Yeah.
we can move
So I would
to
like to
Q&A.
add one point. Basically, see the minimum investment amount which is shown as 54,881, that is something which is generated by the small case platform system. And we've explicitly said that, you know, it doesn't make any sense if you're going to invest 54,000 or 1 lakh and pay, you know, 15,000 a year as fees. So that's why we have said that, you know, minimum 5 lakhs is something we should invest, so that there is justification for you to pay these fees. I mean, for us, it would not matter how much you invest, but then it should make economic sense for the subscriber, that, you know, that the fee component is not very high. So that's why we have said that, you know, at least minimum 5 lakhs is something which you should invest. Again, it is not a recommendation from our side. It is just a commercial decision which the subscriber has to take as to how much percentage fees he will pay.
And I would like to add a couple of more points. One is we don't call it as portfolio, we call it as list of stocks which are under our coverage. These are the well-researched list of stocks. One. Second is since we are long-term investor, as I mentioned, that any stock that we are looking at it, we look at it from 3 to 5 year perspective. So keep that expectation in mind. Third is we don't do trading, so don't come with that mindset that we'll be very quickly changing the list of stocks in our coverage. Sometimes we don't do anything. Maybe a couple of months we may not do. For example, last month we didn't change anything in the list. We may change this month, or we may not change. We may skip again. So, you know, it all depends on the valuation. It's not about the price. Price is one part. Some of the stocks may have gone maybe double or triple, but if we find that there is a value, there is a justification to keep those stocks, we'll keep them. However, if we don't find value, we'll remove them and we'll suitably replace with the stocks wherein we have value available. So underlying principle remains value and not the movement of we can go to Q&A now.
For sure. So we have a question from Mr. Bansal where he wants to know that if I buy the stock, if I buy this cyclical bet small case, will I have a individual control on the stocks that I'm holding? So Mr. Bansal, when you're buying any of the small case, okay, so the stocks individually comes into your demat account and you have a complete control on that. And whenever if any dividend has been announced on that, you get the benefit for the dividend, plus you have an individual control on it. So it's up to you if you wish to send if you wish to sell any of the stocks on that, you can definitely do that. But it's suitable to sell those stocks which has been bought through small case to small case platform only on the basis of an suggestion that has been given by the respective manager for that basket. So coming to your question, you have a complete control on that. You can freely sell the stocks and it will be parked in your demat account individually. Mr. Rajesh wants to.
In fact, ours is actually a no weight small case. I mean, the default weight is calculated by the small case platform. We don't have any recommendation on weightage. I think small case has an option where you can actually change the weightage by changing the quantity and so on. So it's completely flexible and in the hands of the subscriber.
Okay. So there is a question from Mr. Suraj where he wants to know that how the rebalance work. Yeah. So, Mr. Nitin or Jiten, would you like to take up this question?
So a rebalance, I think what happens is the email is sent out the subscribers, and
No,
I think
you just want to know. So sorry to interrupt. You just want to know from the creator of the basket perspective. So it's in a similar line what Mr. Nitin spoke few minutes back. Okay, it's not necessary where every month you people will be pushing rebalance and changing the stocks for that. It purely depends upon the theme for that, and any of the basket is been considered with the
okay,
time
okay.
the stocks that is picked up in the
Yeah,
basket. You people go with a long term time horizon of holding it for a couple of years, 3 to 4 years on that.
right. So again, so it's a monthly rebalance. What we have put as default on small case, and the date is 20th of every month. So 20th of every month is when we push the rebalance. And many times we say skip rebalance, which means that nothing changes. So of course, I think the email is pushed out by small case that there are changes or there is the rebalance has been skipped. So that's how it works. Basically, it is monthly, and yes, often we do skip rebalance also. Like for example, last month we didn't do any changes, and sometimes 2 3 months we will not do any changes. As long as things are working out with the list of stocks which we have, where the positions are not out of favor, cycle has not turned. As long as there is a case to continue to hold, we will hold. Sometimes we do sell, even if we like the stock, and even if we think that the cycle is going to continue. Despite that, sometimes we do sell because there could be some other opportunity available, which gives a better risk reward. So that can also happen. And one thing I want to add, that ours is a 20 stock list. Okay, so we will always have 20 stocks. We will not go to 21. It becomes easier for the subscribers to allocate. 20 is a number where a lot of our subscribers go ahead with equal weight, so they do 5% in each stock. So we keep it at 20. So let's say we like something, okay, and then we want to recommend it. What we have to do is we have to find out one where risk reward is not as favorable as this one, and so then we will give exit in that. So something like that can happen. But as I mentioned, churn is not very high. Typically, the mindset is long-term investing for the cycle to play out and so on. And we will not place sectors where the cycles are short and so on. So we will play sectors where where the upcycle or the turn of the cycle lasts for some time. So that's what we do with rebalances.
Okay. Okay. So there's a question from Mr. Anjur Patel, where his question is, what is the fees if I go with the minimum investment amount? So Mr. Patel, it's a flat fee module. Okay, so the fee which we have displayed, which was been displayed on the screen for a year, is 19,999 inclusive of taxes. Okay, so if you go for minimum investment amount, or if you go for 10 times of the amount that has been mentioned over there, the fee remains the same. So a flat fee module hai, irrespective of the amount that you invest, the fee irrespective of amount that you invest, the fee remains the same only, but the amount should be greater than or equal to the minimum investment amount. So there's no investment based fee on that. It's a flat fee module. So there's a question where even I'm interested to know the answer for that. So it's a question from Mr. Jadov, where he wants to know that, can you tell us any 2 to 3 sectors from where the stocks are being added in your portfolio?
Yeah, so I mean, we can talk about the current representation. We have exposure to capital goods, we have exposure to banking, we have exposure to cement, we have exposure to infra, and we have exposure to rice stocks, and so on. And there will be other sectors too. Yeah.
Okay. There's a question from MS Nair. Okay. Is the basket investing available for NRIs? So, Mr. Nair, as of now, it's not available, but the team is working on that. So, in next 40 to 45 days, the same will be available for NRI itself. So, an NRI can also go for investment into the baskets through HDFC securities. So there is a question from, okay, a question on rebalance again. There's a question from Sheetal where she wants to know that will the changes been automatically executed? So madam, the changes won't be automatically executed whenever the rebalancing is been pushed for any of the baskets on HDFC securities. Okay, so you get an intimation for that on the platform and in your registered email ID also. So you need to go on to that. You need to click on approve, then a window will open which will contain all the details, what has been bought, what has been sold, along with the weights and quantity for that. You need to approve the same manually. So once it's been approved, the changes will be done. Without your consent, nothing will be automatically changed on that. So there is a question from Mr. Shubham, like the question stands that like SIP, do I have SWP? So Mr. Shubham, so there's no SWP on that. It's not a mutual fund. It's in baskets of a basket. It's a curated basket of selected stocks on that. So there's only SIP option been enabled over there. There's no SWP on that. So you can go for lump sum investment or SIP investment as per your. So there is a question from Mr. Neeraj where he wants to know, is there any entry fee? Is there any additional fee apart from subscription fee that I need to pay? So Mr. Neeraj, when you're investing into such type of a basket which has been handled by the respective fund managers, the managers on our platform. So there are only two things that you need to pay. One will be your brokerage that will be executed as per your current map rate. Okay, okay. The second will be a subscription fee. Apart from this, there's no additional fee that we are taking across. There's no entry fee or something on that. It's only subscription fee and the brokerage that you need to pay. So there's a question from Mr. Rakesh where you want to know the subscription time when I can subscribe for the same. So Mr. Rakesh, you can subscribe for this basket 24/7. It's not mandated कि market hours में आपको करना है. During off market hour, right now also you can subscribe to the same. The subscription can be done anytime, but yeah, your investment will go during the market hours only. But you do have an option for placing an off market order. So if you're subscribing the basket now, you can click on invest now and get an off market order also been placed. On the next trading session, your order will be sent to an exchange and it will be executed accordingly. So there's no subscription is not time bound. You can subscribe the basket 24/7, but the investment gonna go during the market hours only. So there is a question from Mr. Kumar where is there any minimum holding period? So Mr. Kumar, there's no minimum holding period on that. No doubt the basket comes with a time horizon of long term, but there's no minimum holding period on that. If you had invested today and after a couple of days or next day also you want to sell the stocks, you can do that. It's not where there is any exit time frame where you need to hold on something on that.
And from our side, I would like to add that whenever we are recommending, as I mentioned earlier, we consider the stock from 3 to 5 year perspective. However, if we find that value is realized much earlier, for example, one of the stocks that we recommended, and we were looking at it that it will achieve this price maybe in 1.5 year or 2 years time. At that time, we'll consider the exit. However, that stock reached the price within 6 months. Okay, before 6 months, so it was up by 125%. We have taken the exit over there. So though the period of looking any of the stock is 3 to 5 years, so that value is realized over that period of time. However, if we find that value is realized much earlier, the valuations have run beyond what we can justify, we are not shying away from taking the exits in those stocks as well.
Okay. So we have a question from Mr. Alok, where he wants to know that what is the market distribution for this basket? How much percentage small cap, large cap, and mid cap? So
It is there in the when you go to the site, you will see that it is showing the composition also. So yes, majorly it is into small and mid cap. What you can say.
okay,
But there, I mean, we look at stocks above a certain market cap where there is enough liquidity and so on. So for us, it is important that execution also happens with minimal impact.
great. Yeah, like as I can see on the basket page, okay, yeah, the market distribution is being clearly been mentioned over there, where it stands at 10% for large cap, okay, 15% for mid cap, and rest 75% for small cap on that. So it's been completely mentioned along with the upcoming rebalance date also, the number of stocks that has been there on the portfolio, the rebalancing frequency for that. So the complete detail has been mentioned over here. So friends, if you have any concerns or if you need any further clarity on the same, okay, which you feel that was not been taken up during the session, so okay, so what you can do that you can get in touch to any of our nearest HDFC Securities branch, your relationship manager, or else you can write to us at customercare@hdfcsec.com. So we will be happy to clear the same on that. So before we conclude this call, Niteen and Jiten, would you like to add anything?
Yeah. So thank you for being there on this webinar and asking very pertinent and important questions. And we try to answer as many questions as we can. And obviously, we are always an email away if you have any questions. So feel free to email us if you have any more questions.
Absolutely, it's a pleasure to be here on HDFC Securities platform and interact with your customers. I hope that the investment journey with cyclical bets, small case, is fruitful for all of you, and I wish you all the best for it.
So friends, you can visit the platform, explore the basket on that, and yeah, the subscription is open 24/7. You can subscribe into that. Off market order भी आप place कर दीजिए ताकि आपका कल के कल ही execution हो जाए, or else whenever you wish to place the same. So thank you so much, Mr. Niteen Parmar and Mr. Jiten Dharmawat, for coming on the call and explaining our investor what is the psychology that works when the market moves up and down, and how like you and your entire team is able to identify the right pick during this market cycle and help our investor to appreciate to have a substantial growth in their portfolio. Thank you so much for joining the call.
Thank you. Bye.
Bye.
Yeah. Thank you everyone for joining the call. Have a great evening ahead. Thank you so much. Have a great